is to give you sort of a broader perspective on financial inclusion. What does it mean from an economic perspective? Do poor people need financial services? If so, what type of financial service do they need? What type of financial services do they use? What type of financial services would we like them to be able to use? And how might we get there? Okay? So, just so that you know I'm in a university lecture, I'm going to start off with a definition to clarify what we're talking about here. But it has a deeper thought here. So financial inclusion is about getting financial markets to work for the poor. And when we talk about financial inclusion, what we're talking about is getting a broader access of financial services to a broader set of people, but also a broader set of financial services. So we're not just talking about savings accounts, and we're not just talking about microcredit to groups of women. We're talking about providing a full range of financial services. We're talking about payment services, savings services, credit, and insurance to poor people, right? And we're talking about those services being provided by formal institutions or institutions in some sense. Now that is important because poor people do have access to most of these services. Right? But most of the services that they use are very informal and very expensive. Right? And so financial inclusion is about providing those services in a better way, a broader set of services in a better way to poor people. So why do the poor use financial services? Well, basically, they use financial services for the same reason that we use financial services. We use financial services to make payments and to make transfers of money. So it's comfortable for me to have the University of St. Gallen transfer my wages to the Zurich Kantonalbank rather than me having to go and pick them up every month and transfer them back to Zurich on the train. Right? Now, in Switzerland, I could actually do that. Right? It wouldn't be that dangerous to do that. I can sit on the train with whatever amount of money, bring it home, and then I go and stash it in the bank the next day. Right? But in Kenya, that's a fairly dangerous thing to do. Right? So people transferring money in Kenya, as opposed to people transferring money in Switzerland, have faced much more greater difficulties, namely danger, that we don't. Right? So they have the same need for services which help them make payments, only they're in a more difficult environment. Right? The same applies to the second motive for using financial services, which is to smooth consumption. So my problem with smoothing consumption, I have two. So the first problem is I get my wages at the beginning of the month and I have to spread those wages out over the month, and I'm going to be making my payments to the Migros and to whoever, to my daughter's riding classes and so forth. And I'm going to be making those payments over the course of the month, and I need somewhere to stash that money during the month and then to use it. Right? So that's sort of my short-term consumption smoothing problem. And I have a long one as well, because I'm earning money today, but at one point in time, I'm not going to be earning money anymore, so I want to save up for retirement. So I need somewhere to stash that money until I'm 65, and then I want to go and use some of that money. Okay? Now, poor people have exactly the same issues. They need to smooth consumption in the short term as well as in the long term, only they again face more difficult challenges here. Most people in developing countries work in agriculture. Right? And in agriculture, you don't get a wage every month. Right? So you get maybe your income payments come once a year, and then you have to find a way of storing that money over the entire year. Right? They also have some payments that we fortunately are not confronted with. For example, school fees. Right? Twice a year in Kenya you have to pay school fees, and so people have to save up this money and then make the payments to the school in January and July, and they have to find some way of saving that money up and making sure it doesn't get stolen or drunk away until the school fees are due. Right? So having a financial service which allows you to save up money in small little bits over time and then automatically sends that money to the bank account of your school where your kids go is a good and very valuable service to poor people, one which we don't need really. Right? Then the third reason why we use financial services is to mitigate shocks, income shocks, expenditure shocks. Now, that is something that, fortunately, not many of us have to deal with. When we are unemployed, right? We get unemployment benefits. And when we are sick, we go to the hospital and our health insurance pays for it. Only in most developing countries, there's neither unemployment benefits nor is there health insurance. Right? So people have to save up for cases where their incomes goes down and where their expenditures go up because somebody gets malaria or gets otherwise sick. Right? So any service that provides you with a way of saving up a little bit and putting it into a fund and then your medical bills get paid for, like a HMO scheme, is a valuable service to the poor, but one which we don't rely on that much. And then the final thing that we use money for is to seize investment opportunities. And again, because most of us are wage earners, but most people in developing countries, they are self-employed, not because they want to, because that's just the only way of earning a living. They require funds to invest, and the returns to capital in developing countries are extremely high. So experiments in Sri Lanka or in Mexico showed that the returns to $1 is about 30 to 50 cents, right, in a year. Okay, so the poor use financial services in the same way they do, only the economic environment that they're operating in is just much more difficult and makes these services much more valuable to them. So what type of financial service providers are there for the poor in developing countries? Formal financial providers. Well, there are a couple. For example, there are formal banks like postal banks or post offices, one type of institution which has traditionally been used a lot because the branch network is just very, very broad. Right? Post offices are close to most people. Microfinance institutions or commercial banks, like here Equity Bank in Kenya, is a bank which has a fairly broad network of branches, and people use for payment services, for saving services, to get access to loan and even buy insurance off them. And more recently, or not that recently, but recent enough, mobile money providers like M-Pesa provide payment services via mobile phones. Right? So these are the form of financial services for the poor. Now, how many people use these services? They're available. How many use them? Here's a map of the world based on recent World Bank survey data. This was done last year. It only came out a couple of weeks ago. Shows you per country the share of the population which either has a bank account or has a mobile money account. So both are included. Right? And the dark blue things are the high-income countries, the OECD countries, and you can see that there's almost universal coverage in OECD countries. But once we go to other parts of the globe, the penetration of formal financial services goes down a lot. Right? And so this picture doesn't really match with the fact that we think that poor people have a very big need for financial services given the economic challenges that they're facing, and the penetration of formal financial services is very, very low. That's what financial inclusion is about. Getting this picture to be darker. Okay? Now, does that mean they don't use financial services at all? It doesn't. These are the type of financial services that the poor use. Right? So, for example, people who run a stall in a market in most developing countries will have a service like a deposit collection services. A person will come along to the stall every day or maybe twice a day and will collect their money for a fee. Now, in Ghana, for example, where this is very widespread, these are young men coming on a moped and taking the money of some person who owns a stall, going away with that money, right, banking it with the bank, and then at the end of the month, that lady gets the money back. And she pays a fee for that service. Right? She doesn't earn interest. She pays a fee for somebody she doesn't know well to take the money away and store it for her for a month. Okay? That's the type of service that people in markets in developing countries use. Or the opposite way around, people come and lend them money on a short term at very high interest rates. They use traders and suppliers. Right? So in the agricultural sector, most people who have a farm will get credit not from a bank but from whoever supplies the inputs to them. Okay? They use money senders rather than Western Union. Right? The people who run a private money transfer service, just by calling up their friends in whatever other city and getting them to pay out to your relatives when you want to send money home. Right? Or they use what is a traditional service called savings and credit associations or rotating clubs, where once a week people in a village get together, they put money in a pot, and one person out of the village gets to take that out and use that money. It's a way of saving and getting credit. Those are the type of services that the poor use. Okay? Now, just to give you some figures on that, here's some statistics on saving, showing you the share of people per region in the world. So, for example, right on the right there is Sub-Saharan Africa. And you can see that 60% of surveyed households in Sub-Saharan Africa save. Right? It's not that people don't use banks because they don't save. Right? They do save, but they don't save with banks. They save either under the mattress, or they save with a rotating saving club, or they save with a deposit collector, but they're very unlikely to save with a bank. Right? And the reason is that the services they get from their rotating service club or from a deposit collector are just a lot more convenient than going to a bank, and they're a lot more cheap. Right? Another one is payments. So this is where farmers get their payments from, or people who are working in agriculture, how they get their payments. The dark blue is the share who get the payments paid into their account, and that's not a lot. Right? So right on the right-hand side is the average across all developing countries, and about a quarter of the surveyed people earn income off agriculture, and you can see that the overwhelming amount of that money is coming in just in cash. It's not coming in on an account, and it's not coming in on a mobile phone. It's coming in cash. Okay? Also, for people who are familiar with the M-Pesa project, this is a picture to study a bit. This is how people send remittances, right? And the yellow bar is remittances through a mobile phone. And if you look at the bottom section here, Sub-Saharan Africa, where mobile money is most common, right? The yellow bar is about as common as sending money through a bank, and it's much less common than sending money by cash, right? People do use mobile money, right? But they're still much more likely to give cash to a friend who will take this home to their village, right? Okay. So that's the latest data we have on financial inclusion. That's what the use of financial services looks like for the poor. So what are the challenges to financial inclusion? I think the challenges are the following. The formal providers of financial services, be it banks or be it mobile money providers or other institutions, have to come up with ideas about providing payments, savings, credit and insurance solutions which are just as convenient as the informal services that the poor are using today. So think about a deposit collector. Right? That's an extremely convenient service. I don't have to leave my stall to run to the bank at 3 o'clock in the afternoon when most banks close. Right? I have somebody who comes and collects the money from it. So think about the service like that. Try to devise products which are just as convenient as that, but make them safer, so you don't run the risk of some young chap running away on his motorcycle with your money. Right? Make them cheaper. And devise them in a way that they can be scaled up. Right? A young chap on one Vespa can only serve a certain amount of people. Right? So that's the challenge to financial inclusion. The question is then how we get there. One way is technology. Right? Now, M-Pesa is a product, for those of you who don't know it, where from the viewpoint of a client, so somebody sitting in Kenya, for that person, this is a product that allows you to load up your mobile phone with up to $1,000, right? And then you can use that to send money to somebody else, to pay bills, or to cash that out if you're somewhere else, right? So that service allows you to save, because I could basically stash $1,000 on my mobile phone. Right? It allows me to make payments, and it allows me to transfer money home or to whoever I want, and it allows me basically to use my phone as an ATM. Right? So it's a very, very, very convenient product when we think about savings and payment services. In reality, though, it's only used for payments. So the numbers on M-Pesa show that the overwhelming majority of people, and there are 17.5 million people in Kenya using this out of a population of 45 million. So this is basically universal use of this service. But everybody is using it for one type of service, and that is sending money home. In most cases, people load up their phone, and a day later, that stuff is gone off the phone. So they're not really using it for saving, they're not using it for making payments, but they are using it for making transfers, right? Although the service would allow you to use it for saving. Now, why is that the case? Well, it turns out when you look at the data that most people using M-Pesa also have a bank account, right? And so they don't use it instead of a bank. So M-Pesa is not a service which broadens formal financial services to people who don't have a bank account. Most people who use M-Pesa do have a bank account. People who use M-Pesa are, on average, better educated, have higher income, and live in urban areas. Right? That's what the survey data shows. Right? So there are obviously people who use these services who don't have bank accounts, but most people who do have a bank account. And just to show you that data, so for the one thing, mobile money services are hardly used outside of sub-Saharan Africa. You can see for different regions across the world, the light blue and sort of the medium blue block here are people with a mobile money account. And it's only really important in sub-Saharan Africa. And the people who have a mobile money account only, right, is about 5% of the population out of 35% that have some type of form of financial services, right? So although, in my view, M-Pesa and these mobile money services are fantastic services, the figures show us that the impact so far has been fairly limited, right? Been fairly limited. Okay, so my take on this is that technology on its own is not going to do the job. And my sort of message to you is that you have to think beyond technology to providing financial services which meet the needs of the poor. So having a business model for financial service provision which thinks about what are they using at the moment, how convenient is that, and how can we do this better. And one example for this is in the same country as Equity Bank, which when I was working there, and that's now 15 years ago, they had a customer base of 100,000 clients. They now have 7.5 million. It's the largest bank in sub-Saharan. I'm not sure if there's a larger bank in South Africa. I think outside of South Africa, in any case, it's the largest bank in sub-Saharan Africa. They have average savings of about $200. They have 150 branches all over Kenya, and they serve basically the entire bank population. Right? So how did they do this? So when I went to open a bank account in Kenya, it took me 2 days to do so. And I had to fill out a load of forms. I had to get my employer to come with me to the bank to fill out the forms and to sign off that I'm allowed to open a bank account. The minimum deposit on that account was $100, right? And it took me 2 days to open it, right? There are not many poor people who are running a stall in a market who can afford to stand 2 days in a bank. As an expat, I could do so, but people running their own stall just can't afford to do that, and they don't have $100 to put down in a bank account. Equity Bank came up with a service where they started opening up bank accounts with a minimum balance of $5, and they were opening bank accounts in 5 minutes. And all they did is they put a couple of laptops in each of their branches, and they had a digital camera taking people's photo, and then they scanned their thumbs, they took a copy of the ID card, and the account was opened. Right? At least by my standards, that's not high tech. Right? But it did the job. Right? It did the job. What they also did is that they started, so they operate in an area around in the highlands around Nairobi where people grow tea and coffee. And what they started doing is sending Land Rovers out to villages where people got the receipts from the tea factories on the day when they got this stuff, right? So people got the cash from the tea factories, and they were able to bank it in a Land Rover, Right? A Land Rover, again, by my it's a British car. Right? It's not high tech. Right? But it did the job. Right? People don't have to get into a bus and travel 20 to 30 kilometers. Right? They pay fares to get there and put money in a bank account. They could do it where they live. Right? So this bank now has 7.5 million customers, and they've done it by applying fairly low tech, but applying fairly low tech to deal with the pressing problems of people being able to open up accounts very simply and very cheaply, maintaining them with low balances, and people being able to access financial services where they live. Right? That has done the job. So my message is, sort of summing up, first of all, poor households need financial services for the same reasons we do, only the challenges they face are more difficult than the ones that we do on an everyday basis. They do use financial services, only they don't use formal financial services. And when we want to think about financial inclusion, we have to think about what type of services they are using at the moment, how convenient they are, and to devise services provided by formal institutions which does this in a safer and cheaper way. Okay, thank you.